Today I would like to analyze LVMH, one of the largest luxury goods companies in the world and one of the worst performing stocks in this year. The stock price is down around 38%. So we're gonna take a look at the financials to find out if it's a good buy right now. The first thing we can recognize is a market cap of 233.53 billion euro. This makes LVMH the largest luxury goods company in the world by the market cap. We also have a dividend yield of around 2.82%, which we can see here did grow in a very good rate in the last 10 years. Now we're going to take a look at the financials. The first thing we're looking for is revenue growth in the last 5 years. We want to invest in a growing business and not a declining business. So in 2020, the revenue was around 44 billion euro. We can see here this was a decline around 17% from 2019, so probably related to COVID. In 2021, we saw the strong growth around 43%. In 2022, we saw the very good growth around 23%. In 2023, we saw the good growth around 9%. And then in 2024, we saw the decline around 1.71%. So overall, I would say in the last 5 years, we saw a very good revenue growth. So it's a check here. The next thing we're looking for is the free cash flow growth in the last 5 years. The free cash flow is very important because it can be used to pay the dividend, to pay the stock buybacks, to invest in the business, and also to pay back the debt. So in 2020, the free cash flow was around 8.91 billion euro. This was a decent growth around 1% from 2019. In 2021, we saw the incredible growth around 79%. In 2022, we saw the decline around 16%. This is also understandable because the year before we saw the incredible growth already. But then in 2023 is continue with the decline around 13%. This is something we don't like to see. But then in 2024 we saw the increase again around 22%. So overall I would say in the last 5 years we saw a very good free cash flow growth. So it's also a check here. The next thing we're looking for is a free cash flow yield over 4%. So this can also tell us about the valuation of this company. The higher the free cash flow yield, the higher the indication for undervaluation. So we're gonna take the free cash flow from 2024, 14.21 billion. Then we're gonna divide it with the current market cap, 233.53 billion. And then we're gonna get the free cash flow yield for 2024. And that's around 6.08%. And that's a very good free cash flow yield actually. It's over the 4% that we're looking for. So the check here. And I think for LVMH is a very good free cash flow yield actually. And we can also take a look at the future assumptions about the free cash flow. We can see here in 2025 is expected around 12.9 billion, in 2026 around 13.7 billion, and in 2027 around 15 billion. So let's assume for 2027 around 15 billion. Then we're going to divide it with the current market cap. And then we're going to get a different free cash flow yield. We're going to get it for 2027. So the number we're going to get with our free cash flow assumptions would be around 6.42%. And again, a very good free cash flow yield as well. So it would also be a check here for 2027. So overall, I think this is already an indication for undervaluation right now. The next thing we're looking for is a debt to free cash flow ratio under 5. This means the company can repay the debt with a free cash flow in under 5 years. A very important number because if a company has too much debt and cannot repay the debt, it can risk to go bankrupt. So first we're going to take a look at the long-term debt. We can see here around 12.18 billion. Then we're going to add the short-term debt as well. This is 8 billion plus the 3 billion, so around 11 billion. Then we're going to divide it with the current free cash flow. So the current free cash flow is around 14.21 billion. And then we're going to get the debt to free cash flow ratio that we're looking for. So the number we're going to get is around 1.63. And that's a very good number actually. It means in 1.5 years we can repay the debt with a free cash flow. So the check here, we like to see that. We can also take a look at the cash on hand, how much money this company has in the bank. We can see here around 13.61 billion. And that's also a very good number. So overall, I think this company has a very good balance sheet and we like to see that. The next thing we're looking for is the enterprise valuation to free cash flow ratio under 25. So this can also tell us about the valuation of this company. The lower the number gets, the higher the indication for undervaluation. So we want to see a low number here. First, we're going to calculate the enterprise valuation. So this is the current market cap, 233.53 billion. Then we're going to add the debt as well. So the debt is around 23.18 billion. We're going to take minus the cash. The cash is around 13.61 billion. And then we're going to get the enterprise valuation. So how much the whole company is worth. So the number we're going to get would be around 243.1 billion. And now we're going to divide it with the current free cash flow. So this is around 14.21. And then we're going to get the ratio that we're looking for. So the number we're going to get would be around 17.10. And that's a great number actually. It's under the 25 that we're looking for. So the check here. And I think especially for LVMH is a great number. And now we can also calculate this for 2027 with the free cash flow assumptions of 15 billion. So then we're going to get a different number. So the number we're going to get would be around 16.20. And again, a very good number is also a check here for 2027. So overall, I think this is an indication that this company could be undervalued right now. The next thing we're looking for is shares outstanding decrease. This means the company buys back their own shares. We like to see that especially we think the company is undervalued. So we can see here repurchase of common stock, and we can see it was a very small number in 2020, but then it increased in 2021, and in 2022 it was around 1.62 billion euro. So overall we can see the number increasing, and I think it's a positive sign, so they buy back more of their shares, and I think this can help the stock price to increase as well. So it's a check here, and we like to see that. Can LVMH stock be a good buy right now? One of the worst performing stocks this year. The stock price is down around 38%. So let's start with a positive about this company. I think they had a good revenue growth in the last 5 years. I also think they had a good free cash flow growth as well. The balance sheet is also looking very good. So we have a low amount of debt and a good amount of cash on hand. The free cash flow yield around 6.08% is also very good in my opinion, especially for LVMH. So in 2027 with our free cash flow assumptions, this free cash flow yield could be around 6.42%, which would look even better. The enterprise valuation to free cash flow ratio around 17.10 is also very good in my opinion. We like to see that number under 25. And in 2027 with our free cash flow assumption, this ratio would be around 16.2, which would look even better. And for me, this is already an indication for undervaluation. And I think LVMH is a company that's growing the revenue and the free cash flow in a very good rate in the last 10 years. So I think this valuation is very good at this moment. What I also like to see is the stock buybacks of this company. This can help the stock price to increase as well. And the dividend yield of 2.82% is also quite good because they had a very good dividend growth rate in the last 10 years. So overall, I think this company does look undervalued right now. If you found this video helpful, don't forget to like and comment and subscribe for more content.